Hi all, welcome to a session by Career Success. And today in economics, we are going to discuss something that is very interesting topic. So, do we have anyone who is listening to this video who does not like money? Definitely not, right? So today we are going to speak about money and banking. A very interesting chapter, and in this particular video what we'll discuss is the importance of this particular chapter with regard to your exams and functions of commercial banks and how they create money. These are the three broad topics that we are going to see today, and let's get started. Why this chapter is important for us? There are about 6 to 7 marks assigned to you in the board exams in CBSE, and similar marks or questions can be expected in other state board exams as well with regard to 12th, right? Now, this 6 marks is something that you can take as it is, the full marks you can take, because this chapter is very easy to understand. When I take you through, you will know that this is a very easy chapter where I can score marks. Because it is very easy to understand, it's very easy to score marks as well. Let's see how it can be achieved. As the name itself suggests, commercial means business, right? Why somebody has to do business? To make money, more money and more money, right? So the primary objective or motive is to achieve or get profits. So all these commercial banks. So what is commercial banks? Even before getting into the topic, when you go to school, coming back from college or wherever you go, you keep seeing a lot of banks or ATMs of these banks. Can you name some banks? Maybe you will name a lot of banks, right? Punjab National Bank, State Bank of India or SBI, Canara Bank, Federal Bank, City Union Bank, n number of banks are there. So these commercial banks, their objective is to make profits. What is that they do to make profits? One, they accept deposits from public. With these deposits, they give or grant loans to people. There are a lot of loans that you would have heard of, right? It can be education loan given to run a small business or large corporate houses, or it could be agricultural loan, housing loan, right? A number of loans you have heard of. And these banks also, the excess money that they have, they invest in securities, predominantly some government securities, and earn money. So this is what commercial banks does. So one question that you can expect is, from a 1 mark point of view, is what is the primary objective or motive of commercial banks, or the banks whose primary motive is profits is called as, right? They have given you multiple choices for you to answer. So the answer will be commercial banks. Okay. Now, getting into the primary functions of commercial banks. One, they accept deposits. So, as an individual, what are the deposits public can make in a commercial bank? There are current account deposits, or they are referred or also called as demand deposits. The organizations, firms, companies, small businesses, instead of keeping money with them, they have it in their bank accounts. Why it is called as current account is when they ask for money, the bank has to immediately release that money. That is why on demand, right, this money has to be given to the depositor. Therefore, it is called as demand deposits. Usually, current account deposits generally they don't attract any interest, right? Okay. Next one is term deposit. 1 year, 2 years, 3 years, or 5 years. They are also called as fixed deposits. It will have a timeline. Therefore, it is called as time deposits also. And of course, you also know that there are savings accounts that we have in these commercial banks. They are also called as savings deposits. And interest rate that the bank offers, commercial bank offers for savings deposits are much lesser compared to time deposits, because at the end of the period only you will be taking that money. In terms of savings deposits, you may withdraw that money whenever you are in need of that. Okay. Now, in terms of giving loans or advancing of loans, providing loans, there are a lot of or types of loans that banks gives. One is called as cash credit, right? And demand loans. That is, whenever the bank demands that loan has to be repaid immediately, and the banks also give short-term loans. Most of the commercial banks give short-term loans. They don't give loans for 5 years, 10 years, right? Very rarely, unless and otherwise, it's a huge investment project. Banks gives these kind of credits or loans. So the primary functions of commercial banks are of two types. One is they accept deposits, keeping that money, using that money, I give you loans, right? So two primary functions. Other than this, commercial banks give few other services, offers to their investors or account holders are called as secondary functions. Now, based on how somebody is repaying their money on time, how they are maintaining their accounts, banks also offer mostly in case of business units, they also offer something called as overdraft facility. So that is something that I don't have money in my account because I am taking any loan. Immediately I am repaying on time. The bank trusts me and says, you can, above, if you have 50,000, you can, another 20,000, 30,000 or 50,000 more, you can withdraw. So in my account I may have only 50,000, but bank will allow me to draw more than 50,000. I can withdraw 60,000 or 70,000 also. And that is called as overdraft facility. And discounting of bills of exchange, right? They do a service called discounting. So in accounts, you would have read, understood letters of lading or bills of exchange, right? So these are, somebody gives me an order saying that they will purchase whatever I am manufacturing, and they agree to pay this much of money at a later date. Using that, banks discount that and gives me, where say they will definitely, their profit is definitely there, because for the service they will deduct some money and give me. And these banks also get into lot of functions. They are referred as agency functions. So like they do lot of agency services, like they help me, they function as an agency or an agent on behalf of me. I have my son or daughter studying somewhere else, I have to pay their college fees. So I go to the bank and say, transfer this money to that institution account. So they do transfer of funds, and they also collect payments of various items. Now you can go to a state bank or a Axis bank and make payment to your tax, right? You can pay your tax in a SBI counter or Axis bank counters. They also help me if I am traveling abroad. They help me to buy foreign exchange. Purchase and sale of foreign exchange is something that they do, and they also offer investment planning, or you can call it as income tax consultancy, right? And sometimes I want a letter from the bank saying I have an account here. They also issue that letter for their account holders. So these are some of the agency functions that they do. Other than this, they offer some utility functions to their depositors or account holders. They are called as general utility functions, like many commercial banks have provide locker facilities where the account holder can go and keep their jewelries safely. And if I'm traveling abroad, I can go and purchase a traveler's check. They issue a letter of credit, and they also collect some statistics, and it gets shared between different government agencies. So these are some of the secondary functions of a commercial bank. Now, the commercial banks are very important in an economy because they are the pillars, because they create money, right? But now, when we say money creation, please remember one point clearly: only central bank in a nation, country, can issue money. They are the only sole authority to issue money. Commercial banks cannot issue money, but they play a crucial role in generating or creating money. So, how they do this is what we are going to see now. Now, let's try to see it in a logical flow. Now, as a commercial bank, I receive deposits from people. When somebody comes and deposit some money with me, say 1 lakh rupees, that deposit, first time I am receiving from someone, is called as primary deposits, right? Somebody goes to a commercial bank and make 125,000, 50,000, 1 lakh, 1 crore, whatever the X amount, that first time deposit is called as primary deposits. Now, using this money, I can lend many times more than what I have. So that is the logical flow. When I lend money, using this money, the primary deposit is only 1 lakh. You have deposited. I am taking it and giving it to somebody else, right? It is referred as secondary deposit. I will not give, I will transfer it to that person who is taking loan. It will be there in their account. When they make use of this and give checks to whatever they have taken, that gets circulated in the economy as money, right? So these deposits, which are called as primary and secondary, both put together are called as demand deposits. And all these demand deposits are part of money supply, like cash or money held by people in an economy. Now, these demand deposits serving as money supply is called as bank money, or money created by commercial banks. Now, note there are some words which we have given in green color, right? So, all these can be or has potential to become your 1 mark questions. What is primary deposits? What do you understand by secondary deposits by commercial banks? What makes or what components make it as a demand deposit, primary and secondary? The term bank money refers to what, or what do you understand by the term bank money? So these are some of the one mark questions that you might expect from this part of the chapter. Right. Now, when this is the logical flow in which how this happens, I have explained you. Now let's try to see this with a very small, easy to understand examples. Even before that, we need to note a couple of points. Commercial banks cannot use all their primary deposit money for lending. If I am taking 1 lakh deposit from person A, another few lakhs from somebody, so all put together I have 10 crores of money as commercial bank. I am not supposed to lend that entire 10 crores or 100 crores again, because the central bank insists that commercial bank should retain or keep a fraction of the money that they receive as deposits, and remaining only they should give. So the fraction of money that is kept with to be kept, right, before lending is called as legal reserve ratio, which will be decided by central bank of a nation, and they keep changing this proportion. Usually they say generally 10% a bank should retain as LRR or legal reserve ratio. Okay, fine. So the understanding is commercial banks receive some X amount of money, say 100 crores. I can't lend the entire 100 crores, out of which if legal reserve ratio is 10%, right, for our understanding, easy calculation. So 10% of 100 crores is 10 crores. I have to retain that 10 crores. Remaining 90 crores only I can lend, right? Now, when I lend these 90 crores, that goes into another bank as deposit, right? And they will retain 10% of that and again lend it to somebody else. So all these commercial banks put together, they multiply money, that is called as money creation, and also in economic terms it is known as money multiplier, right? So here the one more question is, what do you understand by money multiplier? One more question, right? So money multiplier measures the amount of money the banks are able to generate or create based on legal reserve ratio, guidelines or instructions from central bank. In India, the central bank is Reserve Bank of India. You know that, right? Now, how to calculate the demand deposits or money created by commercial banks? That is what we are going to see now. In this entire chapter, you need to remember only one simple, very simple equation. Money multiplier is equal to 1, the digit number 1 divided by legal reserve ratio. That legal reserve ratio can be 10%, 20%, 15%, whatever. So example, a question can be, a 2-mark question can be, or 1-mark question can be, initial deposit in a commercial bank is 10,000 crores, and the central bank guideline says legal reserve ratio to be maintained is 10%. So what will be the total deposit or money created by commercial banks? So the money multiplier is equal to 1 divided by 10%. The 10% is 0.10, that is 1 divided by 0.10, that is equal to 10, right? So how do I understand this? Now simple calculation we will try to understand. You have 1 rupee, 10 paise is 10% of that, that is 10%. 10 paise are 1 rupee. So the answer is 10, right? So this is how uh, you understand. So the money multiplier is 10, which means 10 times of my initial deposit of 10,000 crores is what I am generating. So the total deposit I am generating or money I am creating is initial deposit multiplied by money multiplier, that is equal to 10,000 into 10, 100,000 crore of rupees or 1 lakh crore of rupees is what I am generating. When I say I, the commercial banks. Okay, good. Now, quickly to understand few pointers here, there are 3 or 4 parts in this chapter. We have covered 2 parts. In the next video, I will take you through the next part, that is the Reserve Bank of India or the central bank, what functions they do, and the difference between commercial bank and Reserve Bank. I hope this video was useful for you. If you like it, please share it with all your friends.